Welcome to the main event. In the red corner is the king of electric vehicles, the master of self-driving hype, the pioneer of battery-powered disruption, Tesla. And at the blue corner, the wizard of data, the AI software titan built in the shadows of intelligence world, Palantir. Two companies, two different worlds, but only one can win this investment bout. Let the fights begin. Round 1. Let's talk about their core business. Here, Tesla throws the first punch. Manufacturing cars, building batteries, deploying solar panels. It's a capital heavy, asset driven business with massive global supply chains and factories on every continent. But it also has energy storage, autonomy, and robotics in its corner. Palantir jabs back with a totally different style. It's a software first company, no factories, no raw materials, just code, contracts, and cloud. It sells artificial intelligence platform to governments and business that want to turn data into power. Two completely different weight classes. One is a physical brawler and the other a digital assassin. Here, we don't have any winners. The round 1 ends in a draw. They are just too different to call. One scales through infrastructure and other through software. Second round begin. It's time to check the numbers. Tesla lands a heavy hit with over 96 billion in revenue last year. And while the growth has slowed, it's still pushing ahead with new factories, robotaxis, and energy ventures. Palantir meanwhile clocks it around 2.2 billion in revenue, much smaller but growing steadily. It's expanded from being almost entirely dependent on government contracts to gaining traction with commercial clients. Here's the catch. Tesla's revenue growth is slowing from 50% to a low double digit. Palantir on the other hand is accelerating, though still playing catch up. But this is Tesla's round. Scale wins here. Round winner is Tesla. Let's move to the third round. Investors love growth, but they worship the profits. Tesla has been GAAP profitable since 2020. It generated over 10 billion in net income last year. Margins are compressing in 2025 due to price cuts and competition, but it's still well in the green. Palantir, it was bleeding red for years, but in 2023, it finally turned profitable on a GAAP basis. Just barely. Margins are improving, but still nowhere near Tesla's. Palantir is a late bloomer in this category. And Tesla scores again. The third round goes to Tesla. Let's move on to round 4 then. Now let's talk about the future. What kind of moat do these companies have? Tesla has a brand dominance, massive head start in the EV manufacturing, and an expanding supercharger network, and a strong hold in energy storage. But critics say, is Tesla a car company or a tech company? Its identity crisis is a double-edged sword. Palantir, on the other hand, owns a niche that's hard to disrupt. It has deep ties to the government, proprietary software like Gotham and Foundry, first mover advantage in AI-led data decision making. It's not flashy, but it's very sticky. Once embedded into an organization, it's very hard to rip it out. So, this round winner is Palantir for its quiet power. Moving on to round 5, the valuation and risks. Now, the investor's favorite question. What's the price tag? Tesla trades at a high multiple price to earnings around 60x even now. That's expensive for a company with slowing growth and fierce EV competition. Palantir, on the other hand, it's not cheap either. It trades at 50 to 20x sales, which is still aggressive for a company under 3 billion in revenue. Both are priced for perfection, but Palantir's risks lies in its execution, while Tesla is in expectation and macro conditions like interest rates, supply chain regulations, etc. Neither is screaming a value buy, But if you are looking for an asymmetrical upside and smaller capital, Palantir might offer more room to grow. This round, Palantir, but it's a narrow victory. Now, round 6. Let's not forget the crowd, the investors, the sentiments, and the vibe. Tesla has a cult following. Elon Musk is both an asset and a liability. The stock moves on tweets, rumors, and robotaxi dreams. It's volatile, chaotic, and dramatic, but also deeply loved. Palantir, on the other hand, is becoming a retail favorite, especially in the AI hype cycle. CEO Alex Karp has cultivated a bit of a mystic himself, kind of a quieter, philosophical version of Musk. But in terms of media attention, brand awareness, and emotional investing, Tesla still dominates the room. Round winner, clearly Tesla. Now let's see the final scores. Let's be honest, this was never a fair fight. Tesla and Palantir are fundamentally different companies. Tesla is a behemoth, a mature but volatile investor with real world assets and real world risk. Palantir is lean, high margin software play betting on AI driven future. One punches with hardware, the other with code. If you are an investor looking for stability, cash flow, and a proven empire, Tesla is your heavyweight champ. But if you're looking for a smaller, aggressive play with asymmetrical upside in the AI space, Palantir might be your wild card. There is no knockout here. But if you force me to choose a winner for a long term, risk adjusted potential in today's market, I give a slight edge to Palantir. But remember, the styles make a fight. And portfolios need more than just knockouts. Diversify wisely. If you found this breakdown helpful, hit that like button. Subscribe for more stock market face-offs. Let me know in the comments, Tesla or Palantir, who's in your corner. Until next time, stay sharp, stay invested, stay curious.